All right, well, let's go ahead and get started. I have 8:30, 8:31. Welcome to the Royal Wedding edition of the Roundtable this month for April 2011. I'm joined by my colleagues, Ken Kavula, Lynch, and Hugh McManus. This is Mark Robertson, and you can see we're also joined by the royal young couple of Wills and Kate. And I'm almost giddy because those of you that have been around for a while and have read some of the stuff I've written, you know that I tend to obsess over animals, and I've always wanted to have a unicorn as part of either a column or a presentation. If you look very closely at the royal seal there on the upper left, it actually includes a unicorn. So you gotta like that. And we did require that Mr. Kavula put on a suit and tie for the royal wedding occasion, and we left Cy in his suit and tie, and we actually have an official sanctioned hat. It's actually a Beefeater hat for Mr. McManus this month, and he can't actually see that, so we wondered if the Irishman might object to the British Beefeater hat, but we weren't too sure about that. But there it is for everybody to see, and he's certainly quite festive, joining us from San Francisco tonight. And here's a look at the official program from the royal wedding. Again, you can see the unicorn in all its glory there. And again, we're just using this to kind of date stamp the session tonight. It's the official royal wedding program. Here's our agenda. Here's our official program for tonight. Again, welcome everybody. We noticed a lot of very familiar names amongst the attendees already. If you're new to this is something we've been doing now for almost a year. And it's simply just a session where we get together and talk about investing themes. And then three of us will actually be sharing stock selections along with a mini study for this evening. You can see Cy's going to kick off with TEVA. Hugh McManus is going to keep the Seattle folks happy with Microsoft. And then I'm still deciding what I'm going to do. It'll come to me eventually. But then we generally try to leave a little bit of time for questions and answers. And oh, by the way, in addition to unicorns, I've always wanted dragons too, and you can see that there's actually a Welsh dragon there on the left. And apparently Prince William and Kate already have currency or coins issued on their behalf there on the lower right. Here's our legal reminder that everything we do here tonight is for educational purposes. Absolutely no investment recommendation is intended. We will be talking about real companies, real time, giving our own current day assessment of the situation based on the best available information. But again, it's just an educational demonstration of our methodology. Here's our quick reminder and reinforcement for those who may be new to this demonstration that we're actually doing. We do build out a tracking portfolio, and our intent is to make selections that will outperform the market by 5 percentage points. That's what we mean by a relative return. Our long-term relative return of 5 percentage points versus the Wilshire 5000 is our overall objective. So we generally want to stick to core selections, but we actually have an acknowledgement that non-core selections will be permitted and welcomed up to a certain percentage of the portfolio. This particular slide shows selections that were made from July through the end of 2010. And just real quickly, you can see that one of the first stocks selected there on the first line item is Eli Lilly. I believe that Hugh, in fact, I'm certain that Hugh selected Eli Lilly. And you can see that it's actually performed pretty well, but it actually has lagged the market by a little bit. It's up 7.7% since that July selection, but the market itself, again, measured by the Wilshire 5000, is up 23. So that single selection, we keep track of every single selection independently, is actually trailing the market by 15.3% since the time of selection. And again, we don't get too excited about this stuff. It's early, but there you have the log. You can see that there have been a fairly robust number of selections coming from a variety of different industries. You'll notice Abbott has been selected a few times. You'll notice that Strayer was selected. And by the way, this is actually a closed position, basically a sale where right around Christmas time last year we got cold feet on Strayer, and we actually closed it out during a time frame when it was up fairly well from where we had opened that particular position. And just a number of different sectors represented there. Here are the more recent selections that we've actually had. That's RHHBY.PK. That's the ADR symbol for Roche Holdings, the pharmaceutical company. And you can see that Cisco has been a real favorite lately. Cisco was on the previous slide in a couple slots, but it's actually showing up in 3 cases here. It's been selected the most frequently since we began building out the roundtable portfolio, and we're obviously still waiting for it to achieve greatness and go up significantly. But you can see that the last couple of selections have performed pretty well. Our targets are really pretty simple. This is a number that over the long term we want to see at +5, not -5, at +5. And we really would like to see this roundtable accuracy, and that's simply the number of positions that have outperformed the market since they were identified by one of the 4 of us. And you can see that among this group this year, there is actually only one that has done that. That would be Cy and his Bioreference Labs of last month. Again, we don't obsess over this too much, but we do want to see this number more in the 60-ish, 70% range, perhaps over the long term. And again, it's way too early to jump to any conclusions. And there's the Royal couple there again, filling up some space for us this month. Closing out the look at our scorecards, this is actually a dashboard showing the roundtable portfolio. This happens to be sorted as we do for any dashboard where we're thinking about portfolio management type decisions, from the highest projected annual return. It's the column on the far right. So it's sorted by projected annual return descending. So the highest projected returns are up at the top. Zhongping, Bank of America, Strayer Education, and Cisco have fairly elevated projected annual returns right now. And then there's a fairly thick number of companies in the sweet spot that's between 5 to 10% above the general or the median value for the stock market, which right now is in the 7% range roughly, all the way down to a few that are a little bit richly priced, a little bit lower projected annual returns. In fact, if they get much lower, they will begin to fall into the area where they'll become challenge candidates, and we'll talk about possibly removing them from the portfolio. Cy, did you want to make any comments on global payments? You had talked about it as a possible borderline challenge for the portfolio.
Sure, Mark. I'll just mention why I said that. I was looking at what I believe my par is 7%, if I recall correctly, when this slide was prepared. So anything that's below my par at least gets a glance on my part. Of course, the bluer chip, it is certainly the more tolerant I would be. Global payment, while it certainly has good earning stability, good financial strength, right, both, as you can see, right around 90 there. So it's certainly a strong stock. It is a relatively volatile stock, so I wanted to take a look at it. I took a real quick look, and you know, the price has run up since we selected it. It is positive to the market. On the other hand, its PE ratio is not particularly outrageous, so it really hasn't gotten ahead of earnings. And while 6% is a little below the market, just my glance did not indicate that it warranted a strong challenge. And of course, I'm also strongly biased, as I think Ken mentioned a month or so ago when someone was talking about sales as well, by the bottom line of the portfolio. You can see we're strongly in the blue-green, that being excellent quality at 72.6, and we're in the sweet spot for par at 13.4. So again, even though Global Payments, SEI Investments, and Costco are all below my par on potential return, I don't see any reason to challenge any of them right now.
Sure, thanks, Cy. And you're actually demonstrating a fairly important concept where we really do emphasize first and foremost the overall portfolio, and then go paying closer attention to the individual components of the portfolio. You also give us an excuse to talk about defining this a little bit. The day that this position was opened, I don't remember how long ago it was. It's been 6 or 7 months. We start these with $1,000 per position. So for example, global $1,000 invested into global payments at the time of selection means that this is up over 30%, 33.1% since it was added to the portfolio. So again, some of the stronger performers are going to end up down here at the bottom, and as I said, you typically stand back when they've got fairly high quality ratings and expect hang on to them, and as the saying goes, let your winners run for a bit. So again, portfolio doesn't need a whole lot of attention or boosting, and there's really no reason to go after that particular one tonight. Anybody else have any comments, Hugh or Ken, on any of the holdings or life in general? Or
Well, Mark, I did the same analysis earlier this evening on SEIC investments. Notice it's just 0.1% higher, and my conclusion was almost identical to size, that I'm looking at a really good, strong company, and I'm not ready to unload it from the portfolio at this time, even with a slightly lower than the market potential return at this point.
Okay. All right, well, then let's press on.